Two trend lines that are kind of crossing there, right around 28.
All right.
Testing
1 2, testing 1 2. Well, this is a DayTraderRockStar, and this is going to be the high probability watch list for next week, which is going to be August. Let me get that up in there. We're doing the. I'm actually broadcasting this and recording this towards the end of the day, so we have a show going on in the background. But we're going to be doing this watch list is for the week of August 11th. Now, you hear RPM on in the background here, and he does the he covers for me while I trade in the chat room and work on this watch list all day long. We get it out later in the evening. But I wanted to figure, to get in here. The market's actually starting to rally here, and I figured what a good kind of a backdrop. We're going to have FT71 soon on here, so maybe we'll even get to hear him a little, add a little bonus to your watch list. As you know, the HPS watch list comes out every Friday night for the members of Day Trading Radio. Normally, the first part of this is broken down into a little analysis of the market, some setups, but the majority. The second part, we really put out the focus list, the watch list with all your buy triggers, your profit zones, your stops and loss, and everything that comes along with becoming a good trader. So we'll probably review some of the week here. We'll start off, but remember, I want to actually tune in right now and just kind of
makes me mad.
Listen to this in the background.
Yeah, she don't listen to
Well, they're just talking right now. They're watching the markets here. We're coming up on about 4 o'clock, about 15 minutes to go. I have a couple stocks in here. MT, ArcelorMittal. This is a little gift for you guys because this will be mentioned on the members section this week. And MT, we've started back a position in MT, and then we really did well on this one the last time we got in it. And this one is really an HPS, probably one of the cheaper HPS setups that would come around here. So got into that today, and it's actually starting to move. But if we take a look at the chart here, what a beautiful pivot area up here with the gap down, a big tail. Leads right onto this pivot area. Almost perfect setup. We came right down to it again. We're oversold. Everything here is textbook. We even have a little piercing pattern happening. Everything looks really, really good for a rebound back up. And really, whenever you see a breakdown of multiple support lines here, there's a good chance we actually make our way back up to that level, kind of retest that. So this is a pretty good risk reward, even for a cheap stock. So we got in it today. All that information is going to be going over. I'm going to go over more of that in the second part of the video. But that was a key setup, and that's some things I'm looking at right now. But you can see I have this trend line above us, and I know Paul has something different on the screen.
Appreciate you having me on.
Oh, here's FT. Let's tune in here.
No, it's no problem, man. This is perfect. We've done this quite a bit of Fridays right at the close, and it's always exciting to have you on.
Yeah, except most of the move happened much earlier today, and it looks like it's just creeping up.
Mm-hmm.
Yeah.
So what are you looking at for levels? Well, I mean, all day, man. It's been a nice, strong bounce today. The S&P, 1900 level on the S&P looked like support. And today, what do you think today is? Is it a reactionary, just a bounce, or do you think there's something behind this? I mean, obviously today, from a trader's perspective, we got a nice move. But I mean, what are your thoughts on the markets lately?
So, a couple things. From this morning's Trader Bite I did on YouTube. By the way, derivatives trading is not suitable for all investors. It contains substantial risk. I am required to say that. My expectation for today was truly to test down into the 05 and at an extreme 03 is what I mentioned in this morning's video. Anybody's welcome to watch it on YouTube. I think it's youtube.com/FuturesTrader71 or something. And the expectation was for it to diddle in the middle and possibly make a test of 1917 at some point in the day and basically be stuck between 03 and 17. That was my primary trade idea for the day. However, this pop that we saw at around Chicago time, 12:15, 12:30, that was news driven. That was the pressure that's been put on this is not started out with Gaza and Israel and all that, and it went to the Ukraine and the NATO reporting that Russian troops are moving to the Ukrainian border. 160 tanks and 45,000 troops. All week long, they've been building a force along the border. The Ukrainian government was has been preparing to attack the Russian separatist-held areas of the Ukraine and East Ukraine around Crimea and so on. And so there was a clash, there was almost like one of those West Side Story type of old school movies where both sides are just going down the alley towards each other type of thing. And the market did not like that. And it started to sell off yesterday because yesterday and the day before, a lot of pressure because of it. And the reason it's fundamentally charged is because you see the flight to safety. You see yields drop to multi-month lows in the 10 years. You see gold popping up. You see crude popping up. And then it's boosted by last night's announcement by President Obama at 9:30 Eastern, just before 9:30 Eastern, that he's authorized airstrikes into Iraq and against ISIS. So that gave us a gap in crude. And so to me, it seemed like the sellers had it. And just like I talked about with Johnny on my Monday run, on Monday I came in and I said I expect the market to test in the 3750, 3775 area was a level for me, and then all the way up to 45-ish. But I expect a lower low and a test to the 1900 at some point this week. And it went and took it by a tick yesterday. I'm not saying that to show off, but this is to tell you how logical the market is,
right?
When you look at it from an auction perspective, and that's what we did. We took out the 1900 by a tick just to make sure everybody got filled at 1900. and then today, it definitely didn't meet my expectations. It did not do what I expected today as a primary idea. But then again, Russia announced that it's withdrawing its troops. So around the time this came out, which was noonish, the Russian Defense Ministry comes out and says that the exercises, as if all this buildup of tanks and stuff has been just routine training. The exercises near the Ukraine border are over. All troops are ordered back to their bases. Okay?
And we're dropping bombs on Iraq.
Yeah, and we're trying. And so we saw the pop there, and you saw a reaction across the board. You saw gold pull back a little bit on that announcement. It sold off a little bit, and all of a sudden we're above 17, and we're building a lot of volume up here between 17 and 25, and we're continuing to climb into the close. This close is considered technically an extreme, so it's a sort of a trend. This has turned into a trend day where we're approaching the cash close with prices at highs, and in general this means that there's going to be a continuation play in the ensuing session, being that it is Friday, the market's going to close, it's not going to open Saturday, and then Sunday it's going to open, so things might temper a little bit, but the expectation is for a revisit up into the areas we left behind just a few days ago, with the target up top being 1933.50.
Wow, okay.
The next target.
Yeah, I have a couple of trend lines converging, and they take us up around 28. We're almost there. So you're talking about 33.50. You said? Yeah,
for the next session or two. So Monday, okay. Tuesday, I would expect a test of that. Ultimately, if this continues higher and we're done testing below, in other words, we've hit that 1900 century figure and we're done, then I'm looking for 45 and a retest of 53 above. But I'm not so bullish. I'm seeing these pops right now as retracements. For that to stop, we need to get back above 1965 for this to actually resume new highs.
Right. So you're thinking this could be just a really nice bullish run back up, but maybe a return right back down to where we are, some more negativity following.
Yeah. I think this has not finished doing its thing. Let me share my screen for a second. Are you able to share your screen on that?
Yeah. If you
all right. Well, this is happening live during the show. I'll let them get the screen up here. Maybe I could tune into that too. But if you tune into Day Trading Radio pretty much every day, you're going to get this type of information. FT, great guest, as you can see, and we're really getting some good information. You kind of get to hear being a fly on the wall here. I'm actually just recording this live and doing my research, so I'm not even on the site. So let me see if I could bring this over.
So this is my index
for you.
Chart. So this looks like a whole bunch of spaghetti here. These are not averages. These are actual prices. And what this is it's a percentage chart that begins at the beginning of the session. So right here on the far left is 0%. And it's tracking the transports, Russell, Dow, the Dow Cash, DAX, NASDAQ, Euro stocks, Euro currency, gold, Japanese yen, crude oil, the bonds, and it just shows me the relative movement from the Wall Street open. So at Wall Street, it takes all those prices to be zero or unchanged for the session, and it shows me the flow of the different products as the session moves on. And this is just sort of a relative comparison between different asset classes and products. Look at what happens here at 12 when the Russians announced that they're pulling back their troops. All of the indices shot up here to DAX, NASDAQ, Russell, Dow, and so on. And the flight to safety products right here, the golden line is gold, is the standard 100 troy ounce gold future. See how it drops and it just sat sideways and is now at the zero line? This is what happens on fundamental news. When the market's driven by fundamentals, you see a move. It's not technical in that in a technical move, you see a product lead and then it drags everyone with it over a period of time. When it's fundamentally based, like when a number's released or something like that, you see an immediate reaction by a large class of products, and that's what we saw here. So with this being a news-driven event, you would the expectation is this for it to continue a little bit higher, but I expect this to retest. See how it's leaving a gap here, or a kind of a low volume node?
Yeah, I see what you're talking about.
Zone. Yep. This is considered poorly auctioned now, and the market's going to be is likely to be attracted to this area again between 15 and 20, and it generally happens within the next few sessions. So I expect this to close on the highs, which is very bullish. I expect it to drift up on the Sunday night open, and then you see these targets up here at 33.50, between 32 and 33.50. Mm-hmm. And then I expect it to pull back down here, base in this fat part of the profile, which is the same as yesterday's fat part of the profile. That's a nice base area, and then start to rotate back up into later this week. Basically, I'm going over with you what I would do with Johnny on Monday. I would expect it to continue higher towards this 45, and if it's not able to find sellers at the 45, it'll probably reach up into the 53, 56 area before it finds its sellers.
Okay.
That's how things are shaping up.
All right, we're closing here. About 5 seconds. It looks like 28 was nailed there on the trend line up there, and you're selling here.
All right, well, you got the good, the great information here, as you can see.
Where's the trend line come from? Let's see.
Let's go back and see the close here. You're actually looking at, right now you're actually looking at our dashboard, our trader dashboard at Day Trading Radio. You have the screen, the live screen. You have all the trade alert boxes, the portfolios, all the news. We have a news feed. I put on that. You're going to hear Mr. Lee have our music feed. We have everything here. We have 2 channels, and of course all the watch list, HPS zones, all this. It's really broken down a lot. But let's go back to this because I know a lot. This is really good information. Don't want to talk over it.
So it's been an interesting market. Definitely the last week of July onwards, or mid-July onwards. Definitely a lot more opportunity for trading. Obviously, more opportunity to make as well as lose money. Sure. But it's nice to see. It's nice to see the market actually kind of, loosening up and giving us a chance to actually find something to do. For a period of time there in June, it was like 5-6 point ranges for the day.
Oh yeah, I know, man. It's like it's coming back. The interest is back. They're moving these things. It's moving now. It's 10-point move is nothing. 15-point move is happening. Twice in a 24-hour period. Sometimes it's a lot better. It's starting to feel right.
Yeah, that's right. And it's much easier to read when it happens like that. That's what I've been talking to John about. That it's nice to have a bit of a pullback because it just cleans things up. It greases the wheels a little bit, and that's what's happening here. Yeah. So, have you been trading a lot, or?
If they only knew I was listening here in the background. Well, that's FT71. We continue to. He'll be on Monday. He comes on every Monday, and try to get him on Friday also. And he does stage 5 trading. Great futures broker we partner with. So now let's go into this. Again, I thought that was kind of a special little treat there. It took up about 16 minutes, and let me just start to go over the markets. Now, it was interesting because we go back to FT and what his comments were. He was looking for a move up to 33.50. He said 33.50 early next week. 33.50. Excuse my spittle there into the mic. The overall pattern here, and again, what he does specializes is in that volume profile. I guess what I specialize is in the other technical aspects of momentum, trend lines, and pattern recognition. So we combine these, and when we look at our chart each day, when I look at the chart, you'll see the lines. The orange lines are always they're exclusively FT71 lines. So when he talks about these levels, and you see the site, we know that 1907 level was a double thick line. This 97 level and the 1990 level are the levels that we watch. And when I put in the trend lines, and when we have these lines up, these certain indicators all line up. That's when we have the convergence and make that really that high probability zone. All right, so and again, just going back into his commentary and looking at upside, it kind of goes along with mine too. I mentioned this in the room today as we closed up, and I pointed this out to Paul and everyone else. Is basically we're in the same pattern that this market has been playing out in. We have that perfect rotation. The sellers have come in. We've pulled back to a trend line. We've taken, really identified the first part of a flag. Flags always start off with a move down and then a push back up, and we put in these pivot areas which represent a channel. And hopefully you just get a nice organized channel that you can team off. But the key levels are that first pullback, because if you figure how the market pulls back and how it reacts, you get a pullback and then you get a bounce, and then usually you get that failure, and that's a continuation into that channel. It pulls back and you have a couple levels. And once you're able to establish that, you could pretty much time the flag. You want to get that flag setting up. You want the stochastics to pull back. You want some other indicators to come into play. And when they all come into play, things are looking great. And that's what we have going into next week. We have a great looking chart. The daily is set up. The 60-minute has been key. And that would be the first thing I would mention to you, is that 60-minute. Because it's overbought here once again, and that overbought level has been very key to see profits. We talked about it here. We were able to take profit. We were able, to really manage our short positions versus our long positions, depending on how the market's setting up. That's what you really want. You want to know if the market's going to pull back. You rather not be fighting that tide, versus you want to be able to know when the market's moving up. So normally when we have a dual stochastic setup, when a 60-60 daily setup, that's a very bullish. And we had that back here off of this trend line. This made this a very bullish area. Now we're at the 60-minute overbought level, but the daily is still very bullish and maybe possibly starting to turn back up here. So that becomes very bullish. So we have a bearish bullish indicator, crossing indicators. Daily usually trumps 60. The 60 could get easily overbought here, and we could easily embed, but it's hard to read at that point. This is the magic. This is the sweet spot. When you get the overbought, the dual stochastics, along with the trend line, along with the reversal candle. That's the HPS zones. That's what we trade. Period. That's what That's what is reflected from this site. Those great trades, those great setups. Of course, they don't work out each and every day, but over the long run, the direction usually comes out. Meaning, I don't mean that they don't work out. What I mean is, we're in Pfizer the last couple of days, PFE, and we know that it's in a high probability zone. We recognize the channel within the channel. We got oversold here on the 60, and this is the zone that I want to really pick it up in. So, you know, we understand that we have this underlying trend line. We have a nice pullback. We have an oversold stochastic. So yesterday, into that weakness, we start picking it up. We add a little bit more of it today as we see that we took out the lows and we're starting to grind back up. This has all the characteristics of a great trade, pushing up towards the 20-period moving average. Now we're set up because it's an HPS zone. We scaled in properly, and now we can actually just ride this and get a nice profit. And the other one I'm just to give as a kind of a freebie, which I think is one of the best bets going into next week, is Boeing. Same situation. Recognizing the perfect channel, quality name. The channel within a channel is an HPS playbook play when we have two channels intersecting. And, you know, understanding channels and momentum, understanding candles, and understanding the stochastic and dual time frames enables us to get into these here. We talk about this embedded stochastic, and you look at that first rotation to be a fast rotation. So once you recognize that first 180 move back down, that's your buy signal. When it comes in with a trend line like that, you're all over that. And now it's you know, I think it's easy now to understand this stock has always performed good retracing back to the 20. It never stays away from that 20. We've really pulled away from the 200, away from the 20, downward channel line. Everything pointing to a move back up to the 20. So, I mean, you were looking at a 123 profit. Easy, you know, another 2 points to the upside on this. Take it, no bad news comes out. Close on the highs of the day, everything is good. So that's what we focus here on, and that's what we'll continue to focus on. That's what the watch list is based on. Each week I try to tell you, I said, well, if you liked, you know, the setups, like the Boeing, you know, we the same thing. I go into other ones. I want to give you them all, but you know what? I'm going to stop giving you the free ones. We're going to look at some of the ones we traded this week, give you a little education, and then we're going to save the rest for the members. So let's you know, make that little call on the SPX. Looking good for next week. Again, going back to that level 33.50. I don't see a problem with that on the futures. Next level up that FT mentioned was that 45, and we're going to mark these down on the chart. So when you tune in, you'll be able to see these, and then 53, and then that 1965. One thing he did mention was, you know, the potential of this pattern breaking back down, and that's definitely viable, and that could actually happen fast because of that 60. So Monday is a key, you know, a key level. We get a little further move up. There's a big trend line up here in that 1950 area, and he says, you know, under 1965 is, you know, still subject. So all these things usually play out. You know, his levels, my trend lines usually play out close to exact when they line up together. So you know, I definitely see some upside early next week. We want to watch that 60, see if it turns over. But other than that, you know, with everything that's going on, the channel seems perfect. Everything seems fine. The news is, of course, just out there. It's crazy news. Everything's going on. We're bombing Iraq again. You know, we just heard it all. Plus the Ebola and, you know, other things that just happen each and every day. And this market just it appears to be in another nice flag. So lots of times when you do see a flag like that, that flag will work out. But what will happen is the failure will come after people think that you're breaking out. Like, all right, coast is clear. What happens is you push up a little, break out of here. You never make a new high. You rotate back up here into an overbought level, and that's what really defines your lower top or your right shoulder. Any way you want to look at it, the failure, that's when that happens. So definitely seeing some upside for next week, and we'll manage that out. We'll start to see if we have that failure. We'll see how the strength is. You know, we take it day by day, but we also take the stocks, you know, when they set up. So lots of good setups coming your way. Let's go over those. All right, so taking a look at some of the trades this week, I guess the highlight was the Ebola stocks, and we traded both of them. We were, I would say, one of the first people to recognize TKMR as a great opportunity. We got into it back here on the first. When was this? The TKMR. I sold it on the 4th, right? The 4th, I sold it. So it was right around here. It gapped up. We took profits, and I just, you know, that's how we got in here. And then we took profits. It was like the weekend playing. It gapped up. We bought it on Friday. we noticed that the Ebola was picking up, and we sold it on Monday's gap up. Me, RPM, Paul, a lot of people in the room sold it. Some people actually held on to it, and they've actually sold it today in the last couple days. But that was a fantastic setup. And there was another Ebola trade, BCRX, and again, these are after the fact, but I sold this one today, and again, a breakout. This was actually showing a really good strength, and we just, again, a good setup there. Lululemon, we traded that this week, and it worked out good. We got our bounce off the rising trend line. We took profits, still chopping around, and we're waiting for it to set up again on an HPS setup. And that's really the key, is to identify the HPS zones. And when we get those HPS zones, here is a Brinker, even though I took Brinker off before the earnings. The earnings did pop that. But you can see some of the patterns. This one pattern, what I call a channel breakdown, it usually happens during news. You have a good channel, what I call a 1, 2, 3 pattern, and a channel within a channel. But during this time frame, we started seeing the market get kind of weak, and it was getting, especially the restaurant stocks were getting weak. More of towards here is where the weakness came in. But we did break down through this, and lots of times when we break down through such a nice channel, we'll push back into the channel. Then we had all the news that was breaking, so we caused this little pullback, and that's, you can kind of see that on a lot of charts also. So no longer in this one. Lululemon, the Staples, the CBS, the Monsanto. We did the Monsanto. I mean, you can see the what these setups. This was a nice HPS setup, and I want to bring you up the HPS setups right here. A couple of them triggered this week. A couple of new ones triggered to get in. Here was the Monsanto trade. And again, this is on the HPS section of the site where we send out this watch list, which is going to come after this. So basically, we recognize Monsanto as a nice 1, 2, 3 pattern by these pivot areas, this one pivot before the breakdown. I know that there's an horizon trend line here, but I expect that trend line to break down what I call a trapdoor trend line, because there's such a nice pattern underneath us. So once it gets close to that trend line, or once it gets closer to this lower trend line, it comes into our buy zone. And from that, we look for that retracement back up. So whenever you have a rise in trend line, that breakdown happens, gives you a nice key level underneath us. We already identified that level we're interested in. But the more important part is watching the reaction. So let's see how that worked out. We came right down into our buy zone, and look where we pushed right up into, right back up to that trend line. And at this point, the high probability zone is there's no longer in play. We've got the retracement. That's how charts work. They, especially when you deal with charting and channels, and how charts, when they break down, it's even a play. You have to understand, even though a pattern fails, it doesn't always fail. It's a process. It's an uptrend turned into a downtrend, and when a downtrend breaks down, that breaks through that uptrend line, it has to bounce back up, and it has to fail for that trend to continue down. So that's just a standard setup, and that's what I like to look for. So you'll see a lot of those coming up. We've been doing a lot of trading on the TNA short term. The TNA, we've been trading the small cap ETF. And really just, when I trade, when I follow the futures and the S&P on the site, we also follow the Russell, the Dow, the NASDAQ and stuff. And the TNA three times leveraged ETF is a good one. It gives us a nice return. It's easy enough to, just track on all the time frames. So this was working really good for us. It almost looks very strong, and kind of we're going to try to pop through this trend line going into next week. This is one of the better performing stocks of the week right now. It's actually been rallying, and you can see this. What could actually be here is a bearish flag, but that has to prove itself out. Normally in this bearish flag, I would like to get a little more rotation up, get close to overbought, and then break back down. But still a negative until we break a little bit higher on this. And the other great hedge we had this week was not even so much, but the hedge for the last 2 weeks was trading the VIX. And by trading the VIX, we're trading the VXX. And we were on top of this. We mapped this out from just seeing the reaction of the VIX and feeling good about this. We saw that the daily stochastics on the S&P were rolling over and was getting very bearish. So with that, the VIX was getting very bullish, and we started pushing back up, and we started seeing the higher lows being put in here. and it doesn't give you the signal too much, but we were expecting a little pop here. We got the pop. We've been trading it in and out. Still a viable setup, but again, early next week, maybe some upside, and then we'll look about getting some more downside later in the week. But that's going to, that'll get clearer tomorrow or it's Monday. So just to recap the first part of this video, and then we're going to, I have a lot of stuff for the next part. So just to recap, look at the S&P to push further into this flag. Does this flag play out to the upside? There's a good chance that happens. We'll see how that plays out. But right now, we'll pay attention to that 60-minute time frame, which we are overbought, and that's been key. So, the 60 minutes actually showing that overbought level. The daily is strong. Sometimes the daily and the 60 go against each other. We like when they line up because that gives us an HPS zone. When they kind of cross and one's overbought, one's oversold. Sometimes we look at the stronger, the stronger trend or the stronger signal, and that's usually the daily. But the 60's been key. So, again, even though I do think we have some more upside early next week, news will play a major part, and the stocks are set up. So let's go into these stocks right now.